Okay, good evening, everyone, or good afternoon, wherever you are from. So this campaign for a gap reversal strategy started probably mid-April, and then I created this PowerPoint back in May 12th, and that was when the first official trade was documented. So now it's May 20th. I'm going to go through the results. The market's been super choppy. Not only does it rip up 5% in one day, it could also reverse on the subsequent day 5%. But this strategy was created just to simplify and reduce the return on the investment or the profit factor. And as a result, that would increase the probability of success. And I want to show that through this campaign. So before we begin, we got to just talk about what a campaign is. And a campaign here is a connected series of operations designed to bring about a particular result. So there's these operations that are designed for this particular campaign. They're using operations involving the market internals. That's what differentiates this gap reversal aside from the other gap reversals that other Discord rooms may use. We have to kind of create a purpose for this campaign and understand the meaning of it. And it's basically we want to trade, like basically optimize our trading time by taking advantage of the morning volatility in the whether it's in the first 30 minutes of the opening bell or the 60 minutes from the opening bell. So we don't have a special name for this. Maybe we will later on in the future, but it's just like a gap reversal strategy, and we're using market internals. And the goal for any campaign, not the result, but the goal is to master it. Because once you master it, then you always have like a go-to trade that you can look forward to doing day in and day out. So the starting balance, which is basically the position sizing, is 1,500. 1,500 would be an ideal amount just to kind of test the waters out. It's not a big amount that could affect you emotionally, shouldn't, and it still has the potential to grow 10x or 100x depending on how active you are. Now, it doesn't necessarily have to be 1,500. Depending on how much money you have, it can be greater than 1,500. That would be up to you to decide and what your threshold and pain tolerance is. But 1,500 is plenty enough for your first campaign, and then plenty enough to master it, because in theory, you should be able to master this at the end of the campaign, which is about 4.5 weeks. Okay, and then just to complete the definition of a campaign, we're expecting the gross profits to exceed 6,800, and then the net profit, depending on your status, could vary significantly. So that's not part of the campaign. The advantages, like I mentioned briefly, is the timing. So the timing is pretty straightforward. You can pretty much open these positions and close them within about an hour, or even 30 minutes. Okay, so it's not that long, and then you can go about your day and come back at the end of the day or tomorrow morning, the subsequent trading day. The entry and profits are deterministically defined. Okay, so you kind of know what you're looking for because of the gap extension above, and then you would look to those strikes before the bell opens to see which ones meet the position sizing for your account balance. So for example, if we predetermine a buy limit for a particular strike price at $1, right, then we would immediately enter a sell limit order at around 1.35, which is basically 35%. The strategy does not rely on a bull or bear market. It's just either trade you take could go on the long calls or the long puts, Okay, so basically you don't really have to have a bias. Okay, well, I guess the only bias you need to have is whether you're in long calls, you want the thing to gap fill. So probably you want to have a negative bias. But the morning volatility is basically what we're trying to take advantage of. We're not swinging trades unless we have a runner. Okay, so we had like there was like a small little gap that was open in Tesla 655 puts because it gapped up like 3%. And we should have held a runner because those contracts, if we had 3 or 4 of them, one of them went up. They moved from like $1.50 to like $30. But then the holding time was about 3 to 4 hours. Another advantage is it organizes your trading routine. So if you have a routine, then you can kind of repeat that routine over and over again as if it's a mechanical process, and it doesn't require you to look for trading ideas or look for other people what they're doing in their accounts. So you're mastering that trade. And by creating a routine day in, day out. And once you create this routine, you actually almost eliminate the vicarious trading tendencies, right? Because you want to think for yourself. You want to own the strategy for yourself. Everything, if the whole market gaps up, you just have to find which ones, everything is probably most of them are going to fill. Most of the gaps are going to fill. So you don't have to pick the ticker that I'm going to trade for the gap fill. You can pick any other ticker that you think is going to fill 5x, 10x more than mine. Okay, no one will know that. But remember, the return on the investment is 35%. The disadvantage is it's like 1 trade or 2 trades per day, and you're kind of working with the probabilities, the return on your investment or the profit factor. It could be approximately 35% greater than or less than, depending on the market internal conditions. Okay, but you kind of like this could be considered as a disadvantage because options are often looked at something that has a big reward for such a small little risk, those asymmetric types of setups. And I guess, once you master this campaign and you build the account, reach your goal, then you can take some pretty big asymmetric risks on a Thursday and Friday, right? And that would make the most sense because those are when all the premiums are pretty much exhausted and you can get some really good risk reward opportunities, still applying the same strategy. Okay, but this time you're just kind of holding them a little longer, maybe expecting worthless for maximum returns. I did this compound interest calculator, assuming like we're using 30% of our net balance. Okay, so with 1,500, 20% of that would be 300, and then if we take 5 trades, 5 trades during the week, or 5 trades in total, then the theoretical balance should reach to 1,500 plus 1,424. Okay, so around 3,900. $2,924.91. The campaign general details. So we want to kind of make a timeline here and then say, okay, let's run this campaign for 4.5 weeks. And 4.5, the 0.5 comes because maybe one of those days in the week is flat, so we don't take a trade. There's nothing gapping, right? And so that's enough time to kind of evaluate the campaign performance. The average profit per trade is approximately $188. Okay, plus or minus is a margin of error. Initial position size 300. Max position size is 20%. So as your account balance grows, maybe your 1,500 is now all of a sudden 3,000. Then you can choose to pick a 20% position size instead of so instead of a 300, you can choose maybe a 600 because your account has grown after a week is completed, right? The absolute minimum should always revert back to the initial position size, which is 300, regardless of the position size balance. So if your balance is at 10,000 all of a sudden, your absolute minimum position size should be, in theory, at least $3 or 2 contracts. And then the minimum position size as the account balance grows is 10%. And then every week you would consider adjusting the allocation if you have a profitable week and increase it so that you can increase your profits in the subsequent week when you put on these gap reversal trades. So this is the secret sauce here, and if you don't understand what that means, you might want to kind of join our community and learn this, because it's not a very simple, it's simple once you understand and model it, but the trend is not a very commonly taught metric, or I guess a tool used in trading. So traders don't usually focus on this. I think I think this is very important to understand and grasp. It's not just only the trend; it's a combination of the trend relative to position of the price of the Nasdaq with reference to the 6-day moving average, the UVol, the VIX. All of these combined will kind of help understand what this trend will represent for your position. Okay, so the campaign strategy and description. So basically, like I mentioned before, it's a gap reversal trade setup with using market internals like UVol and trend. We have expectations of around 35% or more, depending on the trend profile. And then we keep a running ledger. Number of trades per day is 1 or 2. And then if you lose on one trade, like say it goes over like 70%. So we're taking about 70% hit because we've assumed a 20% position size. We should actually assume 80%, but 70% is good enough because the probability of a gap reversal trade working is quite high so far. So 70% is a pretty good, it's a pretty wide level of loss, but that should be able to keep you in there. And if 70% is too much, then you would want to maybe adjust the allocation from 300 to maybe 200. You know, you'd have to figure that out. But we're sticking to 20% of 1,500. And then routine is really straightforward. So this is what you want to do in, day out. Just, you know, watch. If you're up at 4 a.m., just watch the radar and see if what's moving in when the line's set at 4 a.m. Eastern time. And then at 6 a.m., you'll see whether the gaps are still holding up, or have that time to see if there's any news associated with it. Because if there's news associated with the gap, then obviously that's not a gap reversal type of trade we want to take, because news was announced before the market opens, so it's probably going to keep on running for the whole entire day. And then at around 6:20, so 10 minutes before the market opens, or any time before the market opens, I usually alert the status of the market internals. So I'll talk about the VIX, the futures, the trend, the volume, not the volume, because the market has to open. The trend has to open as well, but we will use subsequent data of the trend, or the trend data from the previous day, to apply it to the subsequent trading day, the present trading day, to help us make a better decision. And then at 9:30 between 9:30 to 10:15 a.m., you should expect a trade to be open, depending on what the conditions are. And they're all found in this trade alert. So, for example, on May 12th, we opened up a position in Tesla because it's gapping down around 4%. We opened those positions at 199 and, opened up those positions at, 199, and then closed those positions with a profit of $350, just using a $400 risk. So we went a little higher, and it's a little higher because I'm coming off of my own campaign where my profits are already over $2,000. May 13th, here's like, you can kind of read what I talk about before the market opens. And again, there was an opportunity in Tesla. I think it was gapping up. So we opened up some puts at 230 and then closed it off at 310. And that was a profit of 230. So you can see kind of like the result of reducing the return on your investment, how it affects the probability of success. May 17th, we opened up Netflix puts at 115 and then had a sell limit order at 159, closed 2 of those contracts. Left one for a runner, but the market didn't want to sell off, so we closed them off at 125, a little higher than our entry, and that's still a profit. So that was a profit of $54 on that day. Again, here's a description of a morning routine. So I kind of here shown what the graphical representation of the VIX looked like at the time. Also the U-vol from the previous day. I think this was the day where the market was, there's no trend value, but that's obviously, it was a very bullish day, right? And then the next day it had a complete 180. So that's where the red Netflix candle is right there showing. So what do we do here? So as the market was dumping, looked like I opened up the 850 calls, 2 of them at 315, and then opened them up at 414, and then closed it at 560, and the other one at 560 as it stalled, 525, and that resulted. So that used about $830 of my capital to make at $255. And then I also opened up another position that was $1, and that was $900 calls, and closed those off for 26%. So the gross profit for that day was $280. On May 20th, that's today, the market was ripping up higher in the morning, and then we opened up Facebook puts for next week, May 27th, opened up 4 of those for $400, $412. Okay, and then with the cumulative profits from May 12th to May 18th, we took some other trades as well. And then we closed the Facebook puts at 375, at 125, and 154 for a total profit of $117 for that day. And then here's the ledger of the last 5 trading days. So when you add this all up, it should be 117. The total gross profits for 5 trading days is $1,022. So that's not bad if you think about it. If you kind of, that's actually not bad for 5 trades. You've generated over $1,000 using $300, an average of $300, maybe $400, and so that's as of May 20th. Okay, so it's all the trades that were alerted in the Trade Alerts Premium channel have been kind of condensed into a simple format with a summary of the gross profits of $1,022. Okay, so yeah, it sounds small, but then keep in mind, once you start to grow the balance, your allocation amount, your 20% is going to look a lot different, right? Okay, so this was one of the gap reversal trades that went really nuts. So once you generate enough profit, you can take some risk on some other trades. But yeah, we got into these 655 puts this morning, and yeah, it sucked. We opened up like 155, closed like $263, something like that. and it went up to $30, right? And these are the reasons why we want to kind of accumulate those profits day in, day out from Monday to Wednesday, and then, or just for, complete the campaign from 1,500 and go up to 6,800, and then from time to time take a couple of chances, maybe on 1 or 2 contracts for these trades that go from $1 to $30, and that would really boost your account from, when you're trading at around 1,000. So your net balance is now $2,522, right? And then if you catch a good winner on, say, like a Tesla trade where it goes from $1 to $30, then your account is now at $5,000. So going back to the expectations, this chart right here, I've just pretty much copy pasted it all the way down to the bottom, and we are on the 5th trade. Okay, and you can see that the cumulative profits, in theory, should be about 1,400. We're sitting at $1,000 at this point, so we're minus $400 under expectations, but with a winning rate of greater than 70%, less than 99%. So it's a pretty high win rate. We haven't, basically this statement here means we haven't lost yet on a gap reversal. So we're 5 for 5 actually. So if you're interested in mastering a simple strategy and then using those profits for, once you've accumulated enough profits for other big trade setups using the market internals, feel free to sign up here. We have 3 different membership plan selections that you can choose from: Gold, Platinum, and Diamond. To sign up, visit the website www.tosoption.net and join our Discord community. Thank you very much and have a great day.